Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Good morning, everybody. Happy Friday. How's everybody doing? So before I get started, I just want to note that we are giving away 5K accounts. So all you got to do is obviously be on the stream, subscribe to the channel, make sure you like, and then share the link of this stream on your socials. And we'll be announcing a couple of winners throughout the stream. And yeah. So today we have CPI in 30 minutes. So if support would allow me to share my screen. Perfect. So I'm going to just quickly I'll go over the Forex markets in just a little bit, but I want to quickly go over the trade that I took on Nasdaq. So yesterday at the open, right, we ran below this intraday low here, got a nice closure ahead of the open. And then on the open, we started pushing through this fair value gap and got a really strong closure. I didn't take a trade till later in the day, just because I didn't really, I probably should have entered down here because we had this bullish breaker here. So you could take these two bullish candles here. All right. This becomes our bullish breaker. And then this is our inverted fair value gap. And obviously, I mentioned this, I think I mentioned it either on stream with NinjaTrader on Monday or last week, that we had these equal highs up here. And I was just waiting for the right time to enter the market. So all of this, obviously, because we're so close to the equal highs and it was kind of just chopping around, this was, obviously not the price action I was looking for. We were so close to the equal highs that the risk reward just wasn't there. So like, let's say if you wanted to go long here and your stop loss is all the way down here, but your target's here, right? That's only a 1-to-1. Those are trades that I typically avoid. And this is how I filter out my losing trades, right? If the risk reward is not there, I am not taking any trades. So just talking about this trade specifically, why did I get in here? And why do I have these levels here for invalidation? So we just dropped down to the lower time frames. I was really looking at this on like a 5-minute time frame. So we had this small consolidation here, right, around lunchtime. So we have this small consolidation. We have some lows in here. We took out the lows and then closed above it. This to me was our signal to get long. We have a small 5-minute fair value gap here. And then I was targeting the equal highs. And then once we get up here, right, we have a 15-minute fair value gap. And I told a lot of people that are in my group that you need to have patience with these trades. They don't always go in a straight line. And, just even in my Discord channel, everybody was panicking as this market's kind of going up and down, up and down, up and down. They're saying this price action is driving me crazy. This is just normal price action, guys. Price action is not supposed to be just one direction, just one-sided. As soon as you enter the market, everybody expects the market to just rip to the target like this, right? But when you're aiming for like a 5-to-1, you're going to have to sustain periods where the market is very sideways. And, this fair value gap here, a lot of traders, put their stop loss all the way up here. And I've talked about this before. Your stop loss placement plays a major role in your profitability. So having logical stop loss placements, right? Conservative ones, right? Because this is an aggressive stop loss. If you got trailed out here, you missed out on the rest of this move that occurred overnight. If you had your stop loss down here, however, right? Because this is the first candle in the fair value gap formation, right? The fair value gap formation, we need 3 candles. We have 1, 2, 3. If your stop loss goes below candle 1, that is my invalidation, right? So until the market invalidates my trade, which my stop loss, where my stop loss is, I don't do anything, right? And I just have to be comfortable seeing my P&L go from up to slightly down, right? Without panicking. Because if you panic, you're not going to be able to catch the rest of this move that's pushing this market higher. Okay. This trade, which was entered at 11:45, the exit is all the way at 5:30. So how long is that? Right? It's 16 hours that you're in this trade. 16 hours of you impatiently watching the P&L. Or you just turn your charts off and just do something else. Right? Because every time you look at your phone, you get those urges to try and manage the trade, which is not what you should be doing. So obviously we hit that target ahead of CPI. So now I'm fully out of my positions. I do not want to take any trades right now. I'm not short on the market, and I'm also not bullish on the market because we've already taken out the high. All right, so let's go over the dollar index. Right now, the dollar index is just more of a mess. When I take a look at this market, I really don't know which side of the market they're trying to trade to. I did mention, though, however, that last week I was expecting us to trade down to this candle that doesn't have a wick. Okay, we did get down there. All right, this should have been your first target. This could have been your second target, but you can see that this market turned around after we hit the first candle that doesn't have a wick. But we still have a candle that's down here that doesn't have a wick. So if this remains open, maybe this will be our target. But for the time being, ahead of CPI, I'm not taking trades. No life trading. Somebody's saying no life trading. Okay. I want to have a life. Okay. The whole reason you guys get into the markets is you're trying to have a life. Okay. You're not trying to just glue yourself to the screens 24 hours a day. And somebody has an emoji, face red, droopy eyes. I don't even know if that's an emoji. Does that pop up? Yeah. You know, it took me a very long time to try and understand this. Is I don't need to be over managing my trades. All right, you just place the trade and let the probabilities work out in your favor, or not. Right, you're going to have losers. You're going to have a lot of losers if you're trying to be in this business for a long time, right, and have a very long career. You're going to suffer losers. You're going to go on losing streaks. You're going to have rough periods that you have to trade through. So, you know, just kind of going through all these markets, I honestly don't know where this market wants to go, at least euro. And I have this text on my charts because I was talking to my group about this, but this is really all you need. Because I do have somebody that's in my group, you know, that just recently joined, and it's hard for me to put myself in their shoes because it's been so long since I was considered, you know, new to the markets. But this is really all you need. The entry models and all the technicals, there's only so much you can learn about it, and there's only so much that it's going to add to your edge. Okay. Having the right position sizing and trade management. And not only that, I'm going to add another one here. What do you guys think the third one is? What do you guys think the third pillar of my trading is? How to build your own edge? No. You want answers? No, not entries. Nope. Patience and emotional control. This is one of the biggest reasons why I suffered so much struggle for so many years. Because I was impatient and I didn't have any emotional control. So if I entered this Nasdaq long many, many years ago, you know, I just didn't have the patience to see it through. I would be in and out, in and out, in and out. On every little tick, I would be chopping my account alive because I didn't have the patience to just enter the trade and wait. And instead of me walking away with, you know, 4 or 5R, I would end up down 5 to 10R. right? Not taking full stops, but just doing stupid things. Taking way too many trades and not having the ability to sit in a trade that does this, right? The market does not move in a straight line, guys. So every little fluctuation should not be getting you to abandon your trade idea. This took 16 hours to reach the target. 16 hours, guys. And I know for some of you guys that's a lot longer than you're trying to hold it, but that's the reality of trading. Is like you don't know how long your trade is going to last. And let's say it's coming to the rollover period and you have to close your trade. Just reopen it with where your stop loss was. So let's say this market did trade all the way up here, right? And it's 4 p.m. Right? So if you have to close your trade on this candle, right? This is 4 p.m. Maybe just re-enter and put your stop loss here because you're still up like 2R. And if it comes back and stops you out, at least you make like 1.25R, right? All right, so it looks like Mohith Reddy is the first winner of the 5K giveaway. Mohith Reddy just messaged once share your experience with gold. Brother, you're the winner. Don't worry about gold. I can go over gold though, but congratulations. What is my win rate? My win rate floats anywhere from 35% all the way up to 75%. Okay? Average about 50 to 60%. On a really good month, and this is what you probably shouldn't look at. On a really good month, probably 70%, 75%. But those don't come around very often. But even the months where I'm doing 35% win rates, I'm still profitable, right? Because the way I manage my risk, the way I scale into my winners, and the way that I adjust my stop losses. So I would rather take a half hour loss than a full stop, right? And it's getting comfortable with losing. You have to get comfortable with losing. You have to get comfortable with getting trades wrong. It's just part of trading. On what RR, I usually aim for 1 to 3. How to win? So you got to subscribe, attend the stream, obviously, like the video, and share the stream on your social. What time frames do I use for entry? Almost every single time frame. I'll use every single time frame, but I know if I take a trade on a daily time frame that I'm going to be in the trade for multiple days. So let's say if I went long at this fair value gap, this is 1 day. How long does it take to get to maybe this external range liquidity up here? Right? I don't know that. Let's say I enter on this fair value gap, put my stop below the low of candle 1, and I'm targeting here, which is a 2 to 1. How many days does it take to get there? 1, 2, 3, 4 days you have to sit in this trade. 4 days to get a 2R. But if I saw this trade on a 15-minute or 1 hour, I would take the same trade. It's just the time horizon of how long you're going to be in that trade is based on how long it takes to get there. So this is just how many? 1, 2, 4 candles. All right. So if you take this trade on a 15-minute time frame, how many hours is that? 1 hour. All right. If you take this trade on a 1 hour time frame, how many hours is that? 4 hours. All right. So the market is fractal. All this stuff that you're learning is fractal. But on the lower time frame, the problem is that there's so many setups that appear and there's so much action going on that it's hard to hold the trades. All right. Even in a 15-minute time frame, you see this market wake up like this and it comes back on you, and then you exit the trade, and then the very next channel goes to your target. Okay, this is part of trading that I just cannot transfer. Nobody can transfer this. No matter how many people you study, no matter how many videos you watch, you have to be in the market experiencing these things. And backtesting doesn't really give you this experience either because you can fast forward, right? So when you're backtesting, you're fast forwarding. You enter the trade and you just click fast forward because you don't want to sit there, right? But it's not giving you the emotions that it would if you were in the trade live, right? If you're in the trade for 4 hours, your emotions are going through a full spectrum, right? You're getting anxious, you're getting angry, you're getting excited because the P&L is going up. All right, and this is why you probably should just turn the P&L off. Don't even look at the P&L. The P&L has nothing to do with the trade. My ideal risk per trade, it varies. It varies. I have a dynamic risk approach. But if I was trading a futures prop, I'm not taking more than like 0.25%. With Apex, I was swinging Apex a lot more. So it probably was over 1% during specific trades, but I had a massive buffer. Like I think towards the end, my accounts were at like 150K P&L across 20 accounts, right? So it gives me a lot of leeway. I could risk 50K in a day on each account, right? That's what freaking $1 million bucks. Could have risked $1 million on a trade and still been up $2 million. But that buffer that you have, right, that drawdown, you have to figure out how many trades can I take without losing my mind, right? Without going into a tilt period, and how to properly balance that. So when I was trading prop, right? I'm not looking at like a percent risk per se. I'm looking at the drawdown amount and I'm dividing that by however many trades I want to give myself in that drawdown period, right? So if I give myself 10, 20 trades before I blow the account, that's how much risk I'm taking. Because I know it's very, very hard for me to take 20 losses in a row. CPI, coming into this CPI, we're basically sideways since Tuesday. So, are you trying to gamble on this? I'm personally not. I don't know where it's going to go. And that's usually what I do CPI. CPI, if I get the trade that I wanted, which I did on NQ, I'm just fully out and I'm flat. Right? I don't want to have risk going into CPI. Now, if CPI gives us something, then maybe I'll take a look at it. But for the time being, I'm just not doing it. Do some favors. Yeah, maybe I'll do some giveaways during the holiday season or something. I'll give away 2 MacBooks. We'll see. We'll see. Let's see. You don't know what to type. I'm just here for the 5K account. All right, you gotta subscribe. You gotta like the video. Obviously, you're already on the stream. Then share this stream link on your socials. What is my edge in the market? I honestly think my edge is being able to sit and have some emotional control. I was not profitable. Even with ICT, I was not profitable until I was able to get that under control and understand my emotional triggers, which, I that was a work in progress. It took me a very long time to try and understand. The book that I believe it was, Jared Tendler, The Mental Game of Trading, and then there was another book. I can't remember what it was. I think Larry Williams' son wrote it. Let me just take a look. I can't remember what it was called. What is it called? The Mental Game of Trading, and what's the other one called? My Kindle somewhere. Best Loser Wins by Tom Hogard was good. The Mental Edge in Trading by Jason Williams. And then obviously, Trading in the Zone by Mark Douglas. That one's pretty good. The roadmap for trading is really, you got to learn a technical system. All right, but once you learn the technical system, kind of throw that out the window because it only is going to get so good. Right? You have to backtest with it just to understand the edge a little bit. I honestly, to be honest, guys, I never really backtested. But backtesting with it just to understand the edge. And then forward testing and trading live with it. Because when you're trading live, now all of a sudden the emotions are at play. Right? When you're trading with actual capital and you have actual money at risk, you have to figure out what's holding you back. And a lot of times it's not the technical system. It's your impatience and emotional control. Okay, you don't have patience or emotional control to be able to weather losses, to be able to weather markets that go sideways on you for long periods of time without abandoning the idea. And to how to take a stop loss appropriately. How do you take a stop loss without, losing your cool? These two things, points 2 and 3, position sizing, trade management, and then patience and emotional control were two things that I just never really focused on, but that's really what took my trading to the next level. That was the blueprint for me. And I think it's going to be the blueprint for most people. And that's why I don't judge other people's technical systems because I know that we're all trading the same price, right? We're all trading the same price. The market's going up and down with you, with me. Doesn't matter what system you're using. You could be using moving averages. If the market's going down, the market's going down, right? It doesn't matter if that moving average is on your chart or not. Which, I don't know how long I spent changing my chart colors and trying to add different indicators and thinking that, oh, just because I added this indicator, now I have an edge. Or just because I changed my chart colors, now I have an edge. No, that is not an edge. All right. That's just your mind tricking you, thinking that is what the edge is, that's what the edge is produced from by adding things to your chart. That's not the edge. All right, guys. And then another part of the edge is knowing what markets to trade in. So let's say and I talked about this with my group yesterday. Let's say if your strategy has a 50% win rate. How do you improve the 50% win rate? Do you add more things to your system? How do you increase the win rate, guys? If 50% of your trades are losers. How old am I? I was born in 1990, so do the math. Old. So how do you guys improve this win rate? I want you guys to comment. By taking high quality trades? Yeah, that's part of it. What's the other part? Tighter entries? No. It's not tighter entries. I would think that one of you guys would answer this properly. This is how you improve the win rate. By finding how you're avoiding the other 50% losers that you take. So knowing the conditions that you're trading in. This is how you improve your win rate. It's not by adding new things to your system. Okay, because adding new things to your system, when you take that trade, it has the same probability as if you didn't have that new indicator on your chart. Okay? Yeah, reducing stupid trades. Exactly. If 50% of your losers are because you're trading on a Monday or late afternoon on a Friday, you just remove that and all of a sudden your win rate skyrockets. right? Your win rate goes up because you're not taking those trades where you end up taking losses. If you're taking a lot of losers before market open, so if you're trading futures and you're trading at 7, 8 a.m. and you're taking losses and all your winners are coming after 9:30, just stop trading before the market opens, right? It's very simple, but this comes from understanding your data and having experience in the markets. So, a lot of this is going to come down to your experience, because I can tell you when I'm going to sit out of a market. When I was younger and more naive, I didn't know when to sit out, and I wanted to trade every single day. I wanted to trade every single day. No, it's not timing your trades. Timing your trades is a very small aspect of it. I could talk more about emotional control. I could talk more about it, but the thing is, I'm not you. Right? Trading is a mirror. Only you understand how you deal in specific situations, right? If somebody gets angry at you, how do you respond? Do you snap back at them, or do you just kind of just brush it off your shoulder? Right? If you get in a fight with somebody, maybe it's your family member, parent, loved one, how do you respond in that situation? How do you respond to adversity, right? How do you respond when your boss yells at you? Do you try and problem solve, or do you lose your cool and then have this emotional reaction that doesn't really get you anywhere? That's the challenge that you all have to go through, and I cannot do that for you. No matter how much I talk about it, you have to go through it, because none of it. Even if you were sitting next to me, I don't know what's going through your mind. I could probably tell from your body language how you're feeling about a specific trade, because I've been there, but I can't help you work through those problems. Do 2 to 3 losses in a row affect me? Yeah, of course it affects me. I don't like losing, but I know I'm not going to make mistakes when it comes to my execution. And I think a lot of traders just assume that once they figure trading out, that they're going to be this emotionless robot. And that's not the case, guys. So when you're in the markets and you're feeling some type of emotion, you should be journaling it. Okay. In my journal, I don't journal too much anymore, but I probably should get back on it. But whenever I enter a trade, I always write down how I'm feeling before, during, and after the trade. Just tag it with emotion, because you can go back through your data and say, every time I was angry, I scaled in too aggressively. Or every time I was anxious, I cut my trade early. All right, these are emotional triggers that can affect your profitability in a big way. So we've got CPI out in 30 seconds. I don't know where this is going to go. Guess we'll wait and see. If it's going to go higher, probably these highs, but if it's going to go lower, probably down towards this candle that doesn't have a wick. And with CPI, even though if I were to enter a trade, which I'm thinking about not doing it because I'm already up like 10R on the week. So let's say if this rolls over, it's probably going to go back down to this low. So let me just remove this. I don't think it's going to get here today, but if it does roll over and we get a nice daily closure, the next week I'll probably target this low. This one here. The one that doesn't have a wick. And I've already talked to you guys about why I'm bearish on the dollar. right? Until we see some market structure change on the quarterly time frame, and you're probably gonna hear me talk about this for a long time. You're gonna hear me talk about this specific chart for a very long time because, again, I don't know how long it's gonna take to get down to these lows, if it does, right? Because each one of these candles is 3 months. So we had this candle here that doesn't have a wick here. All right, you guys can see how it traded lower, and then we had some accumulation here, and then traded up to this candle here. So if it turns around, I would say our first target, oh, there's another candle up here that doesn't have a wick. Look at that. Your profits are small, but your losses are big. Very simple. Very simple, Mohit. Cut your losers short and let your winners run longer. Letting your winners run, though, it takes a while. It's not just like it's very easy for me to say it and just say, let your winners run. But you have to be in this market and seeing this, right? Let's say if you position yourself long yesterday, you have to sit in all of this sideways slow price action without doing anything, right? Just because your trade is in profit doesn't mean that you just all of a sudden abandon the idea and you know make rash decisions based on your P&L going up and down. I already talked about this market, but I wasn't long. I got out at the high just because I don't know what CPI is going to do. And am I trying to hold it through the high? No, not really. How do I manage my psychology when my prop firm's in a drawdown? You just pretend like you're not in a drawdown. It's very hard to do, but you have to do it. Okay, because you have to come to the charts and execute. If you're always thinking about, "Oh, I need to make it back, I need to make this back," it's affecting your decision making. So let's see if 34. I wanted to get long here. Risk is kind of high, but I think that the reward is there. Um, $1,500 with 5 contracts. Sorry, guys, give me a second. I'm trying to play some trades here. $1,760. So we got a nice big fair value gap. So I'm assuming it doesn't want to come back down there. If it does, it's fine. Just risk 1R. But again, I think dollar is gonna come all the way back down to this candle that doesn't have a wick. Take a look at the weekly. Yeah, last week was bearish. So, you know, we're just in an inside range right now. Just an inside candle. But it looks like all of this is really just distribution, right? Because we've been sideways for a long time. So, you know, if they're trying to get short, they're trying to get short above the weekly open. Yeah, now it's just a matter of patience. Like if I'm trying to get short on the dollar, it's not gonna go there right away, right? And I might have to even hold this over the weekend. And if not, you just take a 1R loss, and that's it. It's not a big deal. Took a loss on pound. Did you take a loss before? Were you positioned before CPI? Because I can tell you, I usually don't trade ahead of CPI. And again, when I look at, I think I put it on here. Did I do it on Euro? Yeah. How do you not take that loss on pound? Filtering out low probability. Trading ahead of CPI to me is always low probability. Is it low probability that we have the equal lows here? I wouldn't necessarily say so. Just because I'm not trying to trade against this candle here. But that is the level of uncertainty that you're always going to have when you take a trade. But for me, this run here, you know, this is happening for a reason. Yes, I went long Euro. And if it comes all the way back down, I'll just take a stop on the day and that's it. But I'm already up like 10R. So if I lose 1R, do Do I really care for the week? No, I'll just make sure that if I take a stop loss that I just get off the screen. Because the worst thing I could do is sit here on a Friday and try and keep trading and give back even more. New York Open, Forex doesn't really move at the same times. Market's already open. Europe's been open since 6 hours ago. All right, we got the second winner, Daniel Ahmad. Daniel Ahmad is the second winner of the 5K account. How much percent? Don't worry about the percent. It's 1R. Every trade that I take is 1R. Whether it's 1/4%, 1%, doesn't matter. My 1R is not your 1R. You figure out what you want to risk. 1R to me is 1R. Because when I start thinking about percentages and P&L is when I can't follow my system anymore. So if I was risking $50 or 5K on this trade, the way that I just simplify it in my mind is I'm taking a 1R risk. So if I take a 5K risk or a $50 risk, how much do I need to make for me to be profitable long term? Well, with 5K risk, I'm aiming for a 10K in profit. If I'm taking a $50 risk, I'm aiming for $100 in profit. What leverage am I using? Doesn't matter, guys. That doesn't matter. 1R is 1R. You need to think in terms of R multiples and not P&L or percentages or leverage. If your 1R is going to blow up your account, you should not be trading that size. Just FYI. It doesn't matter what the percent is. It does not matter what the percent is. It's 1R. Why does that matter? You're focused on the P&L and the amount of risk. 1R is 1R, guys. It's the same trade. If I were to take this trade on a $5,000 account, I'm taking the same trade as if I am on a $50,000 account. It's the same thing. 1R is 1R. And your 1R, it should be based on your level of comfortability. So if your 1R, let's say if you have $5,000 of drawdown, but you're only giving yourself 10 opportunities before you blow the account. Right? Your 1R is more than the person that's trading for, they want 20 trades before they blow the account. But if you both get stopped out, it's still the same loss, right? It doesn't matter what size the trade is. Every time I put a trade on, I'm not thinking about what percentage do I put on or blah, blah, blah. Like, yes, I take a look at it, but at the end of the day, I try and remove that from my mind, because if I'm thinking about how much percent I risk or how much dollar amount I risked, now all of a sudden my decision making goes down the drain. I can't think properly. But if I just risk 1R, which is one chip, right? One poker chip, I don't care how much money or percent I'm going to lose on that trade. So even if I take an outsized percentage risk because I feel confident about the trade, the way that I manage my emotions and my emotional control and my patience is by not thinking about that. What would I do if I'm in drawdown? The same thing I always do. Show up and execute. Because you need to trade like as if you're not in any type of drawdown. Again, you're too focused on your P&L and your account balance. You should not be thinking about these things, guys. You should be thinking about how do I execute my strategy day in, day out, regardless of what the P&L is doing. Whether it's going up or it's going down. I show up to the charts and do the same thing every day. Because if you start thinking, oh, I'm in a drawdown, you're gonna start doing stupid things. You're gonna start trading bigger size. You're gonna start entering trades that you shouldn't be entering. And you're not gonna be able to hold your trades. How many hours do I spend a day monitoring the market? Not I don't know. I try to spend the least amount of time possible. Yesterday I took the trade and was basically just not doing I wasn't really looking at the trade on NQ. Went to bed, wasn't really watching the trade either. I know I'm in the trade, right? I know I'm in the trade, but I'm not doing much to like manage it. So I need this thing to turn around, otherwise it won't look good. But my stop is below that 15-minute low. And because we expanded pretty aggressively, you know, I want this 15-minute candle to at least put in a wick. Do I increase trade double the same trade? I don't know what that means. I'll only size into the trade if I can get my stop loss to break even, which I can't right now. If it gets up to here and I can get my stop loss to break even, then maybe I'll add. But I don't add to losers. Yes, do not focus on your P&L. Pyramiding? To me, scaling into trades was the one way where I really increased my trading performance. But you do it in a smart way where you're not taking on additional risk. Because let's say if this runs to target, and let's say if we get a swing low in here, and just hypothetically speaking, it goes higher, puts in a swing low, and I'm able to do what? Move my stop loss to break even, and then add another position here. Put my stop loss where my initial entry was. Right? Instead of me making 3R, making 5.5R on the same trade. How much time it took for me to become profitable? Almost 10 years. That's a very long time. But because I was too focused on what, guys? I was too focused on the technicals and not the emotional control and the patience. Because I had a strategy that worked. Oh, the first year that I learned trading, I learned something that had an edge. And it's the same with a lot of you. A lot of the strategies that you guys are learning do have an edge, but the strategy is not the edge. The trader is the edge. You could put two people next to each other. And if it was the case where everybody had the same strategy, how come everybody can't make it work? It's because it's not the strategy, it's the trader. the person operating the strategy makes it a profitable strategy. Do I follow spiritual gurus? I followed a bunch of people that talked about spirituality and meditation and having, being okay with uncertainty. All those things did affect my trading in a positive way. How do I manage my overnight positions on futures? You just close and reopen. So again, I talked about it. If this market closed here, right, at 4, 5 o'clock, if you enter, let's say your stop loss, you adjust your stop loss to here, right, before the close. This is your stop loss. You adjust it to here. What's going to happen if you just close it at 4 and reopen it at 6? It's the same price. It's like you never left the trade. And if it stops you out, you're going to lose the same amount of money. So unless there's a massive gap, right, this is a very small gap. If you just close it at 4:45 and reopen it at 6 when the market opens back up, it's like you never left the trade, right? You have the same level of risk as if you did, if you got stopped out. I don't really increase my risk. That's the thing, is I don't increase my risk. I'll size into trades, but I don't really increase my risk. To me, sizing into trades, if you do it properly, should not increase your risk. Let me take a look at gold. I don't really look at gold, but when I looked last night, I didn't really see anything. Yeah, I don't really see anything in here that I would trade. And it's just, for me, very, very quickly just reviewing the daily chart. If I don't see anything that really stands out to me on the daily chart, I don't take it. So I do want to see if this is going to be our market structure shift. And if not, maybe it'll go to my stop loss. I don't know. But I do have a target that's down here that hasn't been hit yet. This candle that doesn't have a wick. And the way that we're, kind of just sideways above the weekly open doesn't really give me confidence that it's going to go higher either. So if you were an NQ, I'd probably would exit ahead of the open. Right? Because we got the open coming out. Oh, the opening bell is in about half an hour, 35 minutes. I already went over how I'd add to your positions. How much risk do I have on right now? 1R. How would I properly scale into a position? Well, this needs to go in my favor first. If it provides a fair value gap or a swing low, then I can trail my stop. So if I trail my stop up, how much risk do I have on open? How much of my account capital will get hit if I get stopped out? 0R. Why? Because it's at break even. If I add another position, how much risk am I going to put on? 1R. So if I get stopped out of both positions, I'm only losing 1R. But if it goes to my target, how much am I making? I'm making 3R on the first one and 3.5 on the second one. That's 6.5R compared if you're not scaling in, right? It makes a massive difference in your P&L without taking on more risk. That's the key. Is you're trying to do this without taking on more risk. Now, so this hourly candle is about to close bearish, and to me, it's okay if the next hour trades higher still, right? Because we're expecting a power of 3 on the next hour. Totally okay with that. Kind of blew through those all-time highs. I'd be interested to see what the market open has for us. But yeah, when we're trading at all-time highs, it gets very difficult to try and um, find targets, etc. But ahead of the open after CPI on a Friday, you should probably be out of your trade entirely. Let's see, not much else to talk about, guys, to be honest. All right, hourly close bearish. Check the 4-hour actually. 4-hour on euro close bullish. And to me, it's okay to see the 4-hour trade lower before going higher. So really, we don't want to see this last hourly high be taken. And I'm probably going to be in this trade for a long time. I mean, if it doesn't go to my stop loss, I might have to hold this till next week. I'm not really a short-term intraday trader. I like to swing trades, and sometimes I have to hold them overnight because it allows me to actually have a life outside of the charts. What's this price point on the Know It candle? 97,957. So we're trading up into this 5-minute fair value gap. And I'm looking at this as a market structure shift. All right, the third winner is Gray Joseph, or Joseph Gray. Sounds like name's backwards. Gray Joseph. Joseph Gray? I don't I think his name's backwards. All right, like I mentioned on the 4-hour, it's totally normal to see the next 4-hour candle start lower. If we want to see it go higher, it actually should start out going lower. Somebody said I identify as Gray Joseph. I don't think that's how it works, man. I don't think that's how it works. Somebody said that this live shows true professional growth. Thank you. So my biggest thing is like, you have to remain calm in the face of adversity. So whenever your trades are going against you, that does not mean you just automatically panic, right? I have a trade idea. I think I want to see dollar trade down in this candle that doesn't have a wick, right? Based on like all of the sideways price action that we've seen above the weekly open. Last week closed pretty bearish, right? And right now the market is just an inside candle. So it could even just do an inside candle and then next week have the expansion, right? Because that's a consolidation expansion. But, you know, overall, the dollar hasn't really moved anywhere. So we haven't gotten a displacement higher, right? That's showing us that they want to buy the dollar. This to me just feels like they're accumulating more short orders before sending it lower again. And I believe that the administration wants a weak dollar, so it kind of makes sense. And if not, I'll just take a 1-hour loss and just walk away. It's fine. The psychology is amazing. My psychology was a work in progress. It took a long time to try and figure out my psychology. Because you have to ask a lot of questions that most people are just not willing to ask. Like, why do I get angry in specific situations? I didn't realize we're trading around this whole number too, 99. So you'd see that we're at 99 whole level and is just really struggling to go higher. So that to me just means path of least resistance feels like it's lower. Just personally, I think path of least resistance is lower. Let's see. Now I'm gonna swing over the weekend probably. Going to swing this over the weekend most likely. Let's say if this thing really runs aggressively from where we are, this could possibly be a new stop loss area. So I'd be able to cut half my risk off this trade. But I usually don't scale in until I'm up at least 1R, 2R. I need to be able to at least get my risk to a manageable level. And let's say even if it goes to like the weekly open again, if you move your stop loss to 0.5R, you could put on another 0.5R. But yeah, this dollar doesn't look very strong whatsoever. So I think I gotta remove some of this info. This is really what I'm aiming for. Oh. Look at the gold chart. I honestly don't see anything on gold. mean, we have this daily fair value gap, but I'm not trying to go long quite yet. Maybe if we get some more daily candles that show us that we want to be long, sure. I mean, in the next 50 minutes, if this gets an engulfing candle bullish, then maybe you can place a trade. But to me, that's a swing trade. I don't have the mental capacity right now to be short-term trading. What's my favorite pair? I think lately it's been NQ. This year it's been NQ. But it's not a pair. It's an index. How many children do I have? None. I don't have any kids. Can I talk about executing trades and of funding pips challenge in an organized manner? Well, first of all, you gotta have a system and a process. You need to have a system and a process. Something that you can follow every single day and every single week. But to me, a lot of that system and process is when I find a trade and I have a trade idea, I basically have to remove myself from the trade so I don't make any silly mistakes, because that's usually where a lot of traders mess up, is they make way too many mistakes while the trade is moving in their direction or on its way to the destination. So when you look at this trade, again, how many mistakes are people making trying to go short, or, they're going long and they see it go against them, they exit the trade at a loss instead of just having a proper stop loss and just leaving it alone. Right? Because you have to go through all of the sideways price action before it does something like this. Right? Before it hits target and before it does something like this. So a lot of it is just dealing with the uncertainty. Right? I don't know if this trade's going to go to my take profit. I have an idea, right, that I'm trying to see through. I'd like to see it trade down to that level. That doesn't mean it's going to, though. All I can do is manage how I feel about the trade and, not making any mistakes while I'm in the trade. Again, my invalidation is really this hourly high. I believe it should line up with the hourly low on Euro. Oh, not really. My stop is like the body of the candle, but that's fine. Because even if this candle closes bullish, right, nothing about my analysis has really changed. It's just an inside candle, right? And then we could get a fair value gap. right? Let's say if it does a fair value gap, it could still trade higher without me being invalidated and then eventually drop lower. But maybe it doesn't drop lower till next week. You know, I don't know that. But my target's all the way down here, so I just have to sustain what the market's going to do in between. I don't really trade using order blocks. I just use fair value gaps, liquidity, and try and have a target. Yeah, I have a plan and I try and follow the plan. That's all you can do. But my plan right now is I really don't want to see. This is really my invalidation on the dollar. Until it takes that level out, I'm going to stay short. But do I know what this market's going to do in the next couple hours? No, I don't. I never really have an idea what it's going to do in the next couple hours. And it could go sideways for a very long time. And I might have to hold this trade in drawdown over the weekend. There's still 40 minutes left on this hourly candle, so it could turn around again. I'm meaning lower. I'd like to see it turn around lower to close the hour. If not, maybe just expect some sideways price action through the end of the day. Let's say if there's no follow through, then I just take a stop out. It's not the end of the world, you know? It's just trading. Exactly. A loss is just another trade. When you look at your equity curve long term, right, all these losses that you take, you're not even going to really notice them if you're just focused on long term profitability. Because you're going to have periods where your equity curve takes dips. That's just part of the game. Unavoidable. So it made sense to come back up here because we have this candle that doesn't have a wick. But maybe that's just a stop run. We'll see. Ooh. So the fourth winner is Zohaib Fines. I'm personally not picking the winner, so can't help you in that regard. I think that would be unfair. To me, it sounds a little unfair. Zohaib Fines is the fourth winner. This thing is slowly drifting towards my stop loss, guys. Oh. Need to turn around. Down about half an hour right now. My stop is below this candle here, so. Um, Jade, if I could give advice to somebody who just finished studying backtesting and wants to start their journey, a trading journey, you really just got to focus on the process. Focus on the process and the probabilities and trust your system. You know, it sounds stupid, but I think most people would be best off if they just set and forget their trades. Because I think you learn a lot more by being in the trade and just leaving it alone. Because I ended up just over managing my trades. I was doing too much. Right, because even with this hourly candle kind of trading against me right now, there's still 35 minutes to go. It doesn't, there's no guarantee that this candle is going to close bullish. And even if it did, I'm still bearish as long as we don't lose this last hourly high. Right, even this candle could flip bearish in the last 4 minutes because we don't have a wick below it. So whenever I'm in my trades, I usually I have to give my trades way more patience than I'm used to, or what I was used to back in the day. All right, I was very uncomfortable seeing this happen, like seeing it trade against my entry and being okay with it. But now, because I know that the market does its own thing when I enter trades, like I have no control over what it does. I have zero control over what this market does. I have to be comfortable with where I put my stop loss, right? Because if I put it in a logical place, it should not go there. But if I just prematurely exit the trade because it's going against me, I ended up realizing too many losses only to see the trade turn around and go towards my target. So I don't necessarily think that having tighter entries is your answer. It's the emotional control that you have when the market is trading against you. That to me is the biggest X factor. Yeah, you got to trust your system and trust your process. That's really all I can tell you. And if you don't have a system or a process, that's probably what you should work on. Because you have to remain calm when you sit down in the charts. If your mind is all over the place and you're nervous or getting excited, you know, I kind of laugh when I see people like shouting at their screens when they hit a TP. Because to me, that long term is like, I don't see how that works. You're just so emotional with your trades that it's hard to make logical decisions when you're in that elevated state. Maybe that's why when I'm on stream, I'm boring and I talk very slowly and I don't really have a lot to talk about. But that's how I trade. Take a look on pound. I would assume pound, I'd probably be leaning bullish as well. Pound, we got a very large bullish engulfing candle. Taking out this low here. And there's a lot of liquidity up here. Right, there's a candle up here that doesn't have a wick. But I don't know. I feel like I'm more bullish on euro than I am on the pound. I don't really trade the pound, to be honest. My patience is excellent. It wasn't when I was in my like 20s, my patience was not excellent. It was anything but excellent. I think just dealing with life made me more patient. Being okay with whatever the market throws at me. Because the market is going to throw a lot of curveballs at you. So we got another 30 minutes to go for the hourly close. I actually want to see us take out this last 15-minute low because we don't have a wick below it. So ideally, this is like a, you know, small short-term high, and then this rolls back over to close out the hour. But again, this is if you know, if I don't get stopped down on this trade, I'm probably going to be holding it for quite a while. All right, if I just zoom out, if this is a nice displacement, I don't know how long it's going to take to get all the way up here. It might take multiple days. Might not hit that target till sometime next week. What's my screen time? It's usually like 2 to 3 hours a day. Now, I will say that it's not just 2 to 3 hours a day because I'm always like checking the markets like every hour. But I would say I'm like focused for 2 to 3 hours a day, like really focused. Outside of those 2, 3 hours though, I try not to spend too much focus because like again, if I'm in a trade back here I can't do anything about it. And just like with Euro, I'm in this trade, but I cannot force it to go to my target. Like it's gonna get there on its own terms. But I have an idea in mind, right? This is like a build up, and we have this large displacement higher. I'm looking at this as a market structure shift. It's totally okay to see it go sideways on me a bit before it starts moving in my direction. We just took at that 15-minute low there. I'm kind of interested to see where this hourly candle is going to close. Yeah, but overall, I'm not bullish on the dollar, especially after the last hourly close. This thing could just kind of just go sideways before the next leg lower. I don't know. So your plans and rules should be the same regardless if you're trading a funded account, a personal account, whether you're an eval or funded. Your rules are your rules, and you have to just remove all of those different external factors. To me, that's an external factor. To me, it doesn't really matter. Because if you're trying to be a profitable long-term professional trader, it doesn't matter what medium you're trading in. Whether you're trading prop or personal, right? At the end of the day, you still have to show up to the charts and execute. So I tend not to put too much emphasis on any of that. Your emphasis should go on, how do I show up to the charts and execute my system and my plan every single day, every single week without falling off the wagon. How do I confirm that an order block is valid? To be honest, I don't really trade order blocks. I don't really trade order blocks. And when it comes to like technicals, I don't think you don't need to know everything. So this 30 minutes pushing much harder than I wanted to. But it's fine. The hourly is still probably gonna, if it doesn't just completely just reverse and go higher, it's still gonna print an inside candle, which is more of an uncertainty. It's my age, old, old, old. I'm old and tired. NQ's parabolic. For me, it's very hard to get long after we've taken out those highs, though. What's my thinking on the current trade? I just have to wait. I'm just waiting. I already gave you my target. It's all the way down here. Right? But if it's gonna go there, how is it gonna get there? It's not gonna go in a straight line, guys. So I have to be patient with it. It might do this. 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 This is where everybody messes up. Right? Because they don't have the emotional control to sit in the trade for that period of time, watching their P&L fluctuate, which I don't look at. I don't look at my P&L. You're just not comfortable sitting in that trade long enough to see it through. Right? And to me, that's the difference maker. I can sit and wait patiently and watch me be in drawdown and not doing anything. Right? Because this is my invalidation. My stop loss is my invalidation. So until it goes there, I'm not doing anything. Even if it goes in my favor, I'm not doing anything. Unless I have a place to, adjust the stop loss and manage it appropriately. A lot of times I just sit still and don't do anything. I know it's very boring, but that's profitable trading for you. Guys, stop asking my age. I'm 35 years old. Dixie Bull? No, I don't see that. I personally do not see bullishness. I mean, look at the CPI candle. It's massively bearish. So my invalidation is the high of that candle. Unless we lose the high, then maybe I'll switch. But, if this hourly closes where it is, we're going to get a bearish hourly fair value gap. And it could trade into the bearish fair value gap and then go lower. But what you're not comfortable with is seeing these markets go sideways for long, extended periods of time. And you abandoning a trade idea. So I have my trade idea. I'm sticking with it. This to me does not look bullish though. All right, we have a very large drop off. This is to me just a sideways price action for another leg lower. At least that's how I'm reading it. Can I be wrong? Yes, absolutely. But that's not how I trade. And that's honestly, when I'm sitting down from the charts, I'm just trading what's in front of me. Right? Whether it be a win or a loss, I just don't see any bullishness right now. And Q, however, traded into a bullish fair value gap and then expanded higher. Dollar to me is just sideways since the release. And there's still 19 minutes to go on this hourly candle, so this thing could close bearish still. Right? You don't know what the candle's going to do until it's closed. So just because it looks bullish doesn't mean it's going to close bullish. And you should be looking at your daily candles the same exact way. So when you sit down in front of the daily chart, if you're trying to trade, power of 3, and you see it going against your position, and you're getting nervous and you're trying to go the other way, you're probably doing something wrong. Because honestly, when you're trying to be bearish on a daily candle, the best time to short it is when the candle is bullish. And I know it seems odd, but that's just honestly what you have to do. How many confluences do I look for? I mean, I'm looking for at least 3. I need to have an invalidation right? A level that the market is trading away from. And then I need to have a target, like some kind of direction on which way I'm trying to trade. So for me, my target is this candle down here that doesn't have a wick. And I've been eyeing this candle for a long time. It's just the timing of it needs to make sense. When this candle rolled over here, I went short, or sorry, I went long on the euro. But as soon as we hit this target, I exited. Because I think this was, what day was this? Where I hit that target? It hit that target on Thursday. Right, so Friday, I'm expecting TGIF. TGIF, turn the market around. This market is basically just sideways since Tuesday. It's really having a hard time trading higher. So to me, that's not bullish. But I'm probably going to hop off here in like 10 minutes or so. I'll announce the last winner in just a bit. Just waiting on the team to let me know. Oh, they already told me. The winner is Dark Yash. Dark_Yash. Congratulations to everybody that won an account today. Sorry, but I don't pick the winners. Congratulations, everybody. I hope everybody enjoyed the stream. I mean, I'm trying to impart as much knowledge as I can in a short amount of time. And I'm trying to get you guys to stop overthinking trading. To me, trading should not, at least I spend way too many years overthinking it. At the end of the day, the market's going to go up and it's going to go down. And you should have stops and targets in place. And that's it. And you just have a trade idea and you're trying to see it through. That's all you can do. You cannot control what the market's going to do once you enter the trade. As much as you would like to. Or as much as other people tell you you can do that. Right? There's just no possible way for you to do it. So I can't control if this market goes sideways on me for the rest of the day. I can't control if it drops the next hour, plummets. I can't control if it goes higher and stops me out. You know, these are all things that I'm just not in control of. And the only thing I can do is just manage my emotions, how I feel about the trade. Right? I put my 1R risk in, and that's it. I just risk the 1R. If I get stopped out, I get stopped out, and I call it a day. And I just come back next week and do the same thing all over again. We have news come out? 9:45? Oh, we did. PMI. So we got a bit of a spike lower. Still haven't been invalidated on the trade. Just probably just going to hold this. You know, unless I get stopped out, and then that's it. Yeah, if I don't get stopped out, then I'm gonna hold the trade over the weekend. Yeah, absolutely. Absolutely. See if it's 15. I'll wait till this 15-minute candle closes, then I'll hop off because I kind of want to see where the hourly closes. If the hourly just closes an inside candle, it'd probably just sit in it. And if it just completely turns around, well, then the dollar is just really just playing games. How do I handle when trading gets monotonous? I don't know. It just gets boring after a while. Just you want it to be boring though. It should be monotonous. And you should be doing the same thing over and over and over again because that's what produces results. What doesn't produce results is when you're all over the place, you know, trading 100 different instruments, trading 100 different styles, trying to learn everything under the sun, and you don't have a process that you can follow. I don't like day trading. I don't like trading a lot. I don't like being in front of the charts all day. I'd rather take one trade and just let's see it through, you know, because in NQ, I was long for 16 hours. Do I need to be in front of my chart for 16 hours? No, I absolutely do not. So we got a gap in here from the news. But yeah, honestly, dollars have just been playing with me all year. This market has been very difficult to trade. Because it's really just been in this massive range. Trading this has been a headache. But if I get stopped out, you know, it's just 1 hour on the day. It's just dollar is not cooperating. We'll see though. This thing could turn around. I don't know. I'm gonna leave it alone. If not, I'll just you know, take the stop, move on to the next trade. But this thing could turn around again. You know, I don't know. It honestly does not surprise me because dollar has been very tricky this year, without a doubt. But I'm gonna hop off here, guys. I hope you know, I hope you guys enjoyed the stream. Congratulations again to all the winners, and I'll see you guys all next Friday. All right, ciao.